What's the state of hedge funds in 2023? Let's dive into it. Hedge funds, on average, have returned 5.7% through November, with equities and credit-focused strategies taking the lead. However, not all strategies shared in this success. Macro and managed futures trailed behind, reflecting the diverse performance landscape within the hedge fund industry. But here's an intriguing twist. Despite these returns, we've witnessed outflows and slower allocations to hedge funds. Why, you ask? It seems investors have been finding comparable returns in the cash and bond markets, highlighting the ever-evolving dynamics and competition within the financial sector. That's right, even with the decent performance of hedge funds, investors are continuously seeking out the best bang for their buck. And let's not forget, while hedge funds were churning out those returns, the S&P 500 was quietly posting a more significant gain of around 24% for the year. How did the markets compete with hedge funds, and what are investors expecting? In the financial arena, hedge funds faced a fierce adversary in the form of the stock market, with the S&P 500 showing a strong performance. The bond market was not to be left behind, rallying strongly as the year came to a close. This rally led to an increase in bond yields, making the money markets and short-term investments seem more appealing to investors who prefer a blend of attractive returns with lower risk. As we turn the page to a new year, investors' expectations are set high. Allocators are anticipated to chase the elusive double-digit returns, placing an added burden on the shoulders of hedge funds. This pressure to perform is not just a trend, but a necessity in the dynamic world of finance. With this in mind, credit, global macro, commodity, and equity long-short strategies are expected to pique the interest of investors. What strategies could hedge funds adopt, and what are the concerns for 2024? As we transition into the new year, we're seeing an interesting trend: hedge funds exploring the idea of adopting barbell portfolios. By combining corporate and structured credit hedge funds with macroeconomic hedge funds, they aim to offer alternative exposure and potentially higher returns. In addition, with bond yields on the rise, bond trading hedge funds could potentially benefit. Higher rates impact the costs of refinancing for companies with bonds and loans, creating a unique opportunity for these funds. On another front, some hedge funds are diving into credit opportunities, including high-yield bonds and various bond trading strategies. The dispersion of returns in the credit market is seen as higher, which could prove attractive to certain investors. However, it wasn't all smooth sailing for global macro hedge funds in 2023, but investors are hopeful for a stronger year in 2024, especially for funds trading on macroeconomic signals. Concerns about bond supply and the fiscal positions of major economies could persist in 2024, potentially keeping bond yields elevated. The anticipation of a slowing global economy could lead to a potential tug-of-war in equity markets between lower interest rates and fears about corporate earnings.